The Nifty Bank, though, that's off in style. Adani Enterprises is going to be considering some fundraising. That stock is up close to around 2%.
Mid-caps too are holding, in fact, marching on pretty smartly.
Compared to what the Nifty is doing, which is nothing, absolutely flat, the banks are doing a lot better with about a 0.6% gain. The Nifty is absolutely flat. The Bank Nifty on an intraday basis has taken out last Thursday's high, which was 43,740, and then it has sold off a little bit. We're back at about 43,550 or so.
Hello and welcome to Markets Today, the show where we track about 6 hours of the day's trading action in just 5 headlines. I'm Ekta Batra. Here are the top stories for this evening. The Lal Street ends flat after a volatile day of trade. The Nifty slips below the 18,300 mark. Broader markets outperform both the Nifty Mid-Cap Index and the Bank Index. Gains close to 0.5%. L&T skids on an all-around miss in the fourth quarter, reports a big miss on margins and revenue. AM Naik to step down as non-executive chairman after nearly 6 decades with the company. He will be designated chairman emeritus, with the present managing director also assuming charge as chairman from 1st of October. Pharma majors Dr. Reddys and Dr. Lal PathLabs stumble on Q4 result. Dr. Reddys reports a big miss on net profit and Dr. Lal PathLabs misses on all parameters. Novelis Q4 profit decline disappoints Hindalco investors, while Asian Paints races on a solid Q4 performance. Gujarat Gas rallies over 5% on the back of a big beat in operating margins and profit. Reports in-line revenue. Godrej Consumer also races on the back of a good fourth quarter led by strong margins. Ratna Money Metals surges on a yearly jump in the fourth quarter numbers. Oil prices rise as stronger demand from the US outweighs concerns over the debt ceiling standoff. Prices have jumped 7% so far this week. All right, well, those were all of the top headlines that we're tracking this evening. Here's a lineup of what we have in store for you. It's a packed show this evening. In Market Opinion, we have with us Matt Orton, who's the Chief Market Strategist at Raymond James Investment in Big Corporate Voices. We have with us R. Shankar Raman, who's the whole-time Director and Chief Financial Officer of L&T, and Eris Israeli, who's the Chief Executive Officer at Dr. Reddys. All right, well, straight to the market action then. It was a volatile day on the Lal Street, pushing the markets to close flat. Broader markets outperformed. The Nifty Bank Index closed with 0.5% in terms of gains. The Nifty Mid-Cap Index also rallied. The pharma sector was the biggest drag. Prashant is here with a wrap.
Oh, well, thanks very much for that. So the market had a pretty flat kind of close, the Nifty that is. The Bank Nifty did much better. The Bank Nifty actually rose a little over 0.5% or so. Now, we've been making this point that the banks have been lagging the Nifty. The Nifty has taken out its previous high, the recent intermediate high. Banks had not. Today it did. At the day's high, it took out last Thursday's high and then kind of came off a little bit. So that's the Nifty and the Bank Nifty. Broader markets did even better, especially the small cap index, which was up about 0.5%. Mid caps did a little lesser. I'll come to stocks there in just a bit. But on the Nifty, gains coming through in names like Adani Enterprises, Adani Ports. I mean, it was a good day for that pack. Asian Paints and Lever. Asian Paints, of course, reacting to a solid set of results, which came in the last hour or so. Losses in, again, largely earnings-related names, Dr. Reddys and L&T. I mean, contributing between the both of them almost 40-45 index points on the downside, and Hindalco was down about 3% as well. But as I've been saying for the last so many days now, it is really broader markets, mid-caps, small caps, which take the cake. The depth of the move, accompanied by large volumes. On your screen, some of these names: Gujarat Gas, Sanofi, SBI Card, Newland Laboratory. Some of them, of course, results reaction, Ratna Money, CA Tires, Greaves Cotton, Kirloskar Brothers, Team Lease, Sharp Move, KEI, Suprajit, TCI, and so on and so forth. I could go on, but these are names which went up with some of the largest volumes today. The new age stocks saw some pullbacks, so Paytm, Nykaa, Delivery were lower. Loris, AB Capital, and Metropolis were some of the other names which actually ended lower from the broader market. We seem to be in a bit of a wait-and-watch kind of a mode. We've been that way for the last 2 sessions. Global markets have also quietened down a little bit. There is more global data, which we will get between today and tomorrow. And then on Saturday, 13th, we get the election results out of Karnataka, which we will react to on Monday. Will we see one more session, a subdued session going into the weekend and the results? That's something we need to wait and watch. Global cues, of course, will be important to watch as always. Back to you.
Okay, all right, Prashant. Thanks very much for that. Well, in market opinion, Matt Orton of Raymond James Investments says that the banking sector is doing well in India. Listen in.
I think banks are a more defensive part of the market because we have seen, at least through earnings season, that ROE has continued to expand. The economy is on good footing in India. And so you don't have the same risk that you have in Europe or in the US with respect to the banking sector. And financials and banks in particular have continued to do well in India. And so I think that area makes a lot of sense.
Okay, so that's a market opinion. But on to the second headline this evening. L&T slumped over 5%. The infra major reported revenue growth of 10% despite missing street estimates. The company also beat its FY23 guidance of 12 to 15%, reporting a 17% growth. Along with the results, L&T announced that A.M. Nayak will step down as the non-executive chairman of the company and will be conferred the status of chairman emeritus. The board has named S.N. Subramanian as the new chairman and managing director. Rima joins in with the details.
Thanks so much for that. So the big miss in L&T's numbers this time is on the margin front. Margins have contracted by 60 basis points on a year-on-year basis. The street was anticipating flat margins. L&T has reported margins of 11.7% for Q4. Because of the Q4 miss, they've also missed their FY23 margin performance. Core EBITDA margins have come in at 8.6% for the full year, a miss compared to their trimmed down expectations. They'd started the year anticipating a 9.5% margin. They brought it down to 8.9% and they finally ended at 8.6%. Another reason is that L&T has been an outperformer. It's outperformed the Nifty by nearly 30% in the last 1 year. FY24 guidance, that said, is pretty healthy. It's no big beat compared to estimates, but it's a resilient guidance. Order inflow guidance of 10 to 12%, revenue growth guidance of 12 to 15%. And one thing that the street has liked is that the company is guiding for margin improvements to the tune of 40 to 50 basis points. The brokerage verdict is a bit mixed. So Goldman Sachs has a buy rating, target price 25.40. CLSA has put a target price at 27.90. But Ambit maintains a sell call. They're saying the company is facing increasing competition from Tata Projects, Afcons and Megha Engineering, and MK has downgraded the stock to a hold from a buy rating and kept a target price of 23.03. Back to you.
Project business margin profile would be around 9%, 9 to 9.5%, depending on the type of projects that we receive and the economics that play out. The manufacturing businesses would be all in mid-teens, and the services business would be around 19-20%. That's the mix. 1/3 of our revenues come from services today, and 2/3 come from manufacturing and projects. And hopefully our thrust on services, if they continue and they continue to be as profitable, that also contributes to the overall margin. So my sense is that blended margins would be anywhere between 9 and 10%. In a normal situation. We are absolutely on spot as far as Lakshya is concerned. We just completed 2 years and 3 more years to go before the plan plays out. The measure of value creation that we have given Lakshya 26 is ROE. We started FY21 with 9% ROE. We wanted to end 26 with 18% ROE. And we are at about 12.2% as we close 23. And we hope to get to around 14% or thereabouts by the time we close 24.
Okay, all right. So that's L&T. But on to the third headline today. Dr. Reddys stumbled over 6% despite an inline fourth quarter. However, the pharma major missed street estimates on the net profit front. Well, overall for Dr. Reddys, remember that it was in fact an inline set of numbers, but it was supported by multiple factors this quarter. For example, they did receive revenue from the PLI scheme, which was to the tune of around 30-odd crores. There was a divestment of brands to Eris, which was to the tune of around 264-odd crores. Revlimid generic contribution this quarter, so the US sales were slower than estimates at around $310 million. versus estimates of around $340 million as well. Now, overall, they also had India, which reported around 32% growth on a year-on-year basis. Adjusted for that, the growth was around 5%, which is adjusted for the divestment to Eris. Adjusted margins came in at around 21% as per Antique versus estimates of around 23.5%. So it was overall a weak performance which came in for Dr. Reddy's this time. Nomura has reaffirmed its buy and maintained the target price at 5,161. Nuvama, they have downgraded the stock to reduce with a target price of 4,200. They believe the core margin is 15% at best. Jefferies, Revlimid generic sales drop led to a miss according to them. They have a buy with a target price of 5,600. Elara reduced with a target price of 4,946. Well, it wasn't only Dr. Reddy's which was in focus. Another company that reported numbers was Dr. Lal Path Labs, which missed street estimates on all parameters. The stock slipped over 1% in trade in today's trading session. So, for example, there was no revenue growth which came through for Dr. Lal's this time. The revenue was absolutely flat, both on a year-on-year as well as on a Q-on-Q basis. The margins also came in at around 23%. The street was expecting some amount of improvement to come through in terms of the margins. So that's on Dr. Lal's. The stock ended lower by around 2%. In more earnings then, Hindalco sank over 3%. Novelis, a wholly owned subsidiary of Hindalco, has reported a profit decline for the third straight quarter. Nigel is here with the details.
Well, actually, Novelis' numbers, they did deliver an improved performance, which is good. The problem is the street is worried on the macro concerns, and that seems to be weighing on the stock. Let's run you through the numbers first. On the shipments front, there was a bit of a disappointment. It was down by close to around 5% because of destocking in the cans division. So that was the lone disappointment actually in the numbers, because otherwise on an EBITDA basis, the absolute number improved to around $400 million odd. That's good news. So that's a good improvement from around $341 million. On an adjusted EBITDA per ton as well, it improved from less than $400 per ton to around $430 per ton. So that as well was an improvement. The net debt, that reduced. Remember, they were guiding for sharp reduction in working capital, and that's precisely what happened. That's why there's that debt reduction out there. Now, they've earmarked a capex of close to around $1.5 billion for the coming year, and they're saying most of what they've laid out will be funded via internal sources. Where's the disappointment then? The EBITDA guidance for the year, towards the end of the year, will be back to around $550 per ton. But in the first half of the year, they're saying it won't be much improvement. So they're talking about $400 to $450 per ton. So in the near term, that could be a bit of a disappointment. The other factors was in the management commentary. They're saying that the can division, it saw destocking in the last quarter. It can continue for the next 2 quarters. That's quarter 1 as well as quarter 2. Also, they highlighted that they're a little bit cautious on the specialty segment, particularly the building and construction business, because of macro concerns and rising interest rates. And finally, they're saying that auto and aerospace, no worries out there. Demand is likely to be strong. The only problem is it's only around 22% of their total mix. So it seems the street is a little bit cautious on the way ahead from here on, giving the macro concerns, and that's why stock is under pressure. Back to you.
Okay, all right, Nigel, thanks very much for that. That's on Hindalco. But moving on, Asian Paints posted what was a solid performance in the fourth quarter. The company's net profit and EBITDA beat street estimates, and volumes recorded a double-digit growth. Net profit came in at more than 1,200 crores, while EBITDA stood at nearly 1,900 crores. Revenue was largely in line at over 8,700 crores. Margins were also above street estimates. All right, time for a break now, but stay tuned. We'll be back with all of the other top stories.
We don't just make new categories. We remake legends. In fact, we make the whole world of India's mobility new forever.
I'm a chameleon. It's my job to change color. But your wealth manager? Well, they shouldn't be copying me, you know. You know that. Choose Nuvama. We only do what's right for you and your money. Nuvama. Let's do it right.
I am heat. AC gone.
Blue Star on.
Blue Star Fast Cool Inverter AC with voice command. Bye-bye heat. Blue Star.
My dad has won a medal for bravery. He's a major in the army. He protects everyone. Karan, what does your dad do?
Rohan, your daddy.
Karan, tell us now.
He's an LIC agent.
That's great. Imagine what if something untoward happens?
So?
Well, Karan's dad provides proper guidance to protect our family's future.
We are proud of our million-plus agents who continue to protect countless lives. We welcome you to LIC. Visit your nearest LIC branch.
वोल्टास का नया प्योर एयर एडजस्टेबल एसी विद हेपा फिल्टर लाए साफ ठंडी हवा सीधे आपके घर, वो भी 6 एडजस्टेबल टनेज मोड्स में।
तो हवा और सेविंग्स दोनों टन-टनाटन।
Welcome back. You're still tuned into markets today on CNBC-TV18. Well, on to the fourth headline today. Gujarat gas surged over 5.5% on reporting a big beat in margins at over 14% versus an expectation of over 12%. Net profit and revenues also beat estimates. Sonal is here with the key details.
Oh, yes, absolutely. But let me start with the numbers first up. It was better than what the street was working with. Still, there was a sequential decline. So revenues up 6.5% quarter on quarter, absolutely in line with street expectations. EBITDA was down 4%, but much higher than the poll of 475 crore rupees. It came in at 560 crore rupees. Margins 200 basis points higher than the poll at 14.3%. Net profits flat on a quarter on quarter basis, but much higher than the poll at 370 crore rupees. It was a volume-led beat. So volumes came in at 8.9 MMSCMD versus an expectation of 8.5 MMSCMD, and it is an improvement that the company has seen in terms of sequential recovery. Now, analysts, they are split on the outlook going forward as well, because for the last couple of quarters, Gujarat Gas has been facing margin pressures. Morgan Stanley is bullish on the stock, has an overweight rating. They say industrial gas volumes were the ones that surprised this time around. The outlook is strong and the quality of volumes also will be stronger. They are expecting recovery in chemical demand, which will help normalize spread between LNG, and investor skepticism of course remains on the stock, but they see a good path to recovery. Motilal Oswal has similar views. They have a buy rating on the stock. They think the long-term prospects for the company are very robust. There's addition of new industrial units, expansion plans in place that will drive growth for the company. However, we have JP Morgan and Jefferies who are actually bears on the stock. JP Morgan has an underweight rating. They think that volumes improve, but margins still decline quarter on quarter. Company has been agile in pricing strategy, but competition from propane continues to be stark, because right now the pricing is similar for both propane and natural gas. PNG industrial volumes are still down nearly 44% from the peak, so recovery here is very important. Jefferies has an underperformed rating. They have raised their volume targets going forward, but they still think margin pressure will continue, and recovery is limited till propane prices do not rally disproportionately in comparison to spot LNG, and that's where Gujarat Gas's future triggers will come in from. They are awaiting sustainability in terms of volume recovery, and that will be the next trigger going forward for the company.
Okay, all right, Sonal, thanks very much for that. Ratna Money Metals and Tubes surged over 6% on the back of better than expected fourth quarter numbers. The company's revenue is up by 54% year on year. EBITDA is also up by around 78% on a year on year basis. Surabhi is here with more.
Thanks so much for that, sir. Ratna Money Metals and Tubes have surged in trade today on the back of good numbers that they've posted. They've reported the best ever quarter. Their revenue was up 54% on a year-on-year basis, close to 1,500 crores. The EBITDA was up 78% at 300 crores. The Q4 margins came in at 20%. Now, this is the second consecutive quarter where the company has posted an EBITDA margin above their targeted margin band of 14 to 16%. In Q3, they had posted an EBITDA margin of 18%. And in Q4 of FY22, they had posted a margin of 17%. So they have seen an EBITDA margin expansion of close to 300 basis points. Their PAT is also nearly doubled at 75 crores versus 37 crores same time last year. So overall, a good set of numbers from Ratna Money Metals.
Okay, all right, Surabhi, thanks very much. Well, moving on, Godrej Consumer rose over 2% on the back of what were strong margins for the fourth quarter. The company reported a beat in profit as well as revenue, which met expectations. Godrej Consumer's lower raw material costs has aided the margins, and domestic branded volume also rose 11%. Banglam is here with the fine print.
It's a near perfect quarter that has come in for Godrej Consumer. The company set us up for good results, and as a result of which it's met the analyst expectations, which of course was set by itself, the company itself. 3,200 crores on the revenue. We have 641 crores on the EBITDA, much above estimates, and as a result of which the net profit also beat street expectations. The EBITDA margins improved by 400 basis points, much higher than the other larger peers. The gross margins improved by 340 basis points. The company went ahead and plowed back some of those savings into ad spends as well, so that as a percentage of sales increased by 70 basis points, and they reduced other expenses too. Domestic branded volume growth at 11% has been the highest that we've seen in the FMCG pack this time around in this quarter, and brokerages like it too. If you look at what Goldman Sachs says, they say that the turnaround story for the company is completely fully underway. The international business for the company too has started to see a recovery, and strong margin expansion with high visibility for FY24 is something that they like. They have a target of 1,150 rupees on the share.
And we do expect gross margin expansion in FY24 over FY23. The latter part of FY23 did see a gross margin expansion, but we will continue to see gross margin expansion throughout FY24. We will continue again with category development initiatives and hence higher working media investments, which again, are seeing results now in terms of the kind of volumes growth which we have seen in India, say in last quarter. We will see what we call as basket of controllable cost reduction. Again, we saw, I think, close to 200 bips of reduction in controllable cost in FY23, and we will see meaningful reduction again in FY24. We did call out earlier that one of the major reasons for weak consumer sentiment was inflation, and now inflation is receding in some of the staples within FMCG category. And we are seeing those price drops, which in turn is also now propelling growth, at least in those categories. Consumer sentiment seems to be, gradually improving. Definitely, we'll continue the momentum which we have seen in our business, not just last quarter, honestly, but for last now couple of quarters.
Okay, well, let's move on then to the last headline for today. The fifth headline, oil prices rose as strong demand from the US outweighed concerns of the debt ceiling standoff. Prices have jumped 7% so far this week. Manisha's here with the details.
Well, it's been a good day and a good week for the crude oil prices, where we are trading above $75 a barrel with nearly 7% of gains coming in for this week. The strength comes in on the back of a weakness in dollar index, which has not been able to cross above 102. That has been supportive. And add to that the fact that we have seen the U.S. inventories decline when it comes for gasoline, distillates and jet fuel. So clearly demand is picking up, not just for the regular usage, but for travel as well, with the summer season fast approaching. And markets totally shrugged off the U.S. crude inventories built up for around 3 million barrels that we saw in the previous week as well. Support also comes in from the fact that we are looking at reports of disruption between the U.S. and Canada pipeline. How much is the damage, until when, and what is not being delivered are some of the details that the street is still working and waiting on. But until then, there is support coming in from there. And then there are reports as U.S. cancels 140 million barrels of crude release from the Strategic Petroleum Reserve. So that crude also is not coming into the market now. And another turn is that the U.S. SPR actually has to buy crude to fill back its reserves. As and when that happens, you could be looking at more support coming for the crude prices. The reason we're not at 80 right now is because the Chinese imports have been quite uneven. The month of March was quite strong, but for the month of April, the crude imports in China have declined by 18%. And the markets also believe that even as Russia and OPEC are talking about output cuts from May until the month of December, it usually is that they are not able to keep that word, and you could be looking at higher supplies coming into the international markets from Russia and OPEC, and that's weighing onto the markets. Having said that, it is going to be about the Bank of England monetary policy meeting. That is what would give you further direction for prices.
Okay, all right, Manisha. Well, continuing with the story, Peter McGuire of XM Australia expects higher crude prices soon.
They're saying, what's the timescale going to be? Is it going to be closer to the end of the year? Is it going to be, that over the summer period, Northern Hemisphere summer? So these are all concerns that, when they start to build and they start to buy, then I think that's going to also force prices higher. So, yeah, there's a lot of, I think there's chances you could be seeing higher pricing over the next matter of a month or two.
Okay, and on that note, it's a wrap on this edition of Markets Today. Thanks very much for watching.